Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach the art of trading at Trading University. First market we'll take a look at will be the Australian US dollar. Australian US dollar is holding up on that support we identified last week. Anytime you see longer term support like that, you see that bullish pattern, that green box highlights that bullish pattern. And right there, look at where you're at. You're at that level where you chip below that, you reverse that long-term pattern, you hang on to it, you potentially get a pretty good rally. You can't rule out a big swing trade from there. So definitely still keeping an eye on that level. You know, we talked about this last week, how we see value down here in the Aussie on the approach to 70, and we're going to show you a way to potentially take advantage of that against a currency that we see long-term weakness against, and we'll get to that chart when we get to the euro. But for now, Aussie dollar momentum still down. Majority of your patterns down, short term, intermediate term, yet you have that longer intermediate term pattern still bullish. So big level right there. The market's sitting on 71.70, so that's going to bear watching. Really, to reverse that, you need to chip through it pretty good. You need a weekly close below it, so that's why you see it's just walking the line right now. Big level there. Nothing going on though. Next market, dollar Swiss. Nothing's changed here. This is really my core position in the currency. It's just been accumulating this guy all year on dips, and that's working out well. Big level up above here. That's going to be your 60-day pattern resistance right there, RTT level. I don't think that level looms as big as it would have, say, a month ago. Your 60-day pattern, 60 and above too, being strong resistance, and I say that because of where we're at in the economic cycle. You're pretty much through May. You're looking into June. You're definitely seeing stronger economic data from April. That's only going to get stronger. The May numbers are going to be stronger than the April numbers as far as the U.S. economy. So that's going to kick in. That's going to be a big bullish boon for the U.S. economy, for the dollar as well. So you also have a pretty powerful seasonal down in the euro, and that's the effect of the cause being the U.S. economy kicking in springtime, the effect being in the market. So I don't think that this level, big level for us, technically, I don't think it'll loom as large because of the underlying strength in the U.S. economy right now. So a big level nonetheless, though. You need at least at least a weekly close beyond that, a couple dailies and a weekly close beyond that. And you know that would probably constitute a breakout for us, but not in the traditional way. Most people think of breakouts, they think of breakout, it's not going to come back, it's just going to keep going. Essentially, it makes buying the dip all that more attractive, and we'd be all about buying a dip anyway in here. But you get you close above there on a weekly basis, boy, that's going to make that dip even more attractive for us. So we're not breakout players. We buy dips and uptrends, sell rallies and downtrends. You have an uptrend here. That uptrend is only going to strengthen itself if it closes above this critical level here at, right below par. You get above par, that's going to open the gate. That's going to make buying dips. So basically, it'll make buying less steep dips than more attractive as opposed to deeper dips. Next market we'll take a look at will be the dollar index. It's going to be a similar story here. You can see that pretty strong intermediate pattern still in place. You're still in a downtrend here, although you've had a pretty good rally, pretty good momentum on the way up, and same story with that level at 96.32. I don't think it's as strong as it would have been in here and in here on the way down. I think that, again, the U.S. economy is really kicking in, and that's going to show up in the June data, which would reflect the May performance. So I think you have big numbers ahead, underlying fundamentals coming up strong for the dollar. So I don't see that resistance being as powerful as it once was. On the other hand, you can never rule out a swing trade south from that level, and you don't even have to go south too much to make money on it. So you know, we pride ourselves in seeing both sides of the market. So despite the bullish underlying fundamentals, you got to eye that level for a potential short hop on the way down. But boy, that makes a couple closes above it takes away that swing trade south, and it makes buying the shallow dip all the more important for us, all the more exciting for us. Next market, the euro. Euro, just above support there. You can't rule out, again, a swing trade north on that level, but the same story as the last couple of markets we covered. You get a close below it, it's going to make selling shallow rallies all the more attractive. So we think there's a ton of room on the downside in the euro. You take a trend line here, when you break that trend line right there, we think there's a ton of room below, and here's how we're going to show you how to take advantage of that. Because I was saying before, we think you're coming up on support in the Aussie, but we think you got a lot of downside in the euro. Take a look at this market. Take a look at euro Aussie. There it is, and you just gave a sell signal late last week in our methodology. So I'm shorted. Our students are shorted. So we like this market. Short euro Aussie. We think there's plenty of room down below. Give you a look at it on a monthly chart. Give you scale there. Plenty of room down below. But monthly is still strong. You still have pointed higher. Here's the weekly, though. There's the chart I wanted to show you. We think that you go to the bottom of that range here. We think you get it down into the high 130 handle, and boy, that's a full that's over 15 full handles lower. So we think euro Aussie on the short side a good play. Back to the daily chart, very defined risk too, because if it gets above that red line, that's all that is the 230. You take that high, that low. All you do is close above that 2/3 and then you exit that trade. So very defined risk, small risk, but really sweet reward on the way down, we think. So euro Aussie on the short side, like it. Next market, gold. Gold's cool because it was a leading indicator market on the way up. Potentially leading indicator market on the way down. It found that resistance of that 2/3 retracement of the 3-year move there, and now look at it shifted that 60-day pattern. So here I'll show you how this sets up on a ratio, and this is where we take our marching orders from. Look at gold shifted the 60-day down. On the other hand, to give you scale, the dollar held that 60-day down. Likewise, the euro 60-day is still up. So you haven't shifted the 60-day pattern yet in the dollar and the euro. That's a pretty important level for us. Yet you have in the gold. So gold, longer term shift than this looks. It doesn't look like much. It looks like you're coming down to the bottom of that range, the 2-month range. But on the other hand, you have shifted a pretty big pattern. So we think there's plenty of room below in the gold now, and you also had that critical weekly close below it too. So what this means is it doesn't mean you have a breakout in the gold, but it means it makes selling rallies in the gold much more attractive. It's going to mean we're going to sell more shallow rallies in the gold. So like gold on the short side. Last market we'll take a look at will be U.S. interest rates. That's what we haven't even touched on too. I think that the Fed is very likely to raise interest rates in June based on the economic performance that we saw in April. That we're kicking in. Those April numbers are coming out. You had a better than expected GDP number. You had retail sales really kicking in, which we were calling for the last 2 months. You're seeing that now. You're going to see big numbers again in June coming out to reflect the actual performance in May, and that's going to be the emphasis to raise interest rates. Here is interest rates. Here's a chart of rates. You can see that they held that 2/3 support down here, just right around 170, 1.7%. And you're in a bit of a wedge here, but we think a breakout here is imminent, and that would be higher. And give you some scale there. We'll go out to a weekly chart. We think it's imminent that you're going to see higher rates in the States, and this chart's going to be a reflection of that. We think when the Fed makes their next move, that you'll clear 2%, and you get it doesn't take you much above 2% over time. If it holds above 2%, time is going to shift this great bear trend line right there, and there's going to be plenty of room on the upside in interest rates. And again, that spells that's dollar supportive, so it spells a firm U.S. dollar going forward. Thank you so much. My name is Jay Norris. I teach at Trading University. We'll see you next week.